AI processed 650 transactions in minutes, but one incorrect $25,000 classification could distort expenses, equity, liabilities, and taxable income. This is why AI automation alone is not an accounting workflow. A reliable workflow combines AI processing with defined human review checkpoints. This OBG outsourcing demonstration shows how white-label accounting teams can use AI for routine bookkeeping, while keeping accountants responsible for validation, professional judgment, and final approval. The first checkpoint happens before client data enters an AI workflow. The firm must define what the system is permitted to do, what requires human review, and what must never be approved automatically. AI may assist with data extraction, categorization suggestions, duplicate identification, and reconciliation suggestions. Human review is required for new vendors, unusual amounts, low-confidence classifications, and material transactions. And some items must never be auto-approved: owner contributions and distributions, loans, related party transactions, fixed asset purchases, and equity activity. AI can recommend. It cannot assume responsibility. The final accounting responsibility remains with qualified people following the firm's policies. Phase 2 is secure document intake. Client records should enter through an approved portal or controlled system, not personal email, unapproved applications, or public AI tools. Approved tools only. Role-based access, multi-factor authentication, encryption in transfer and storage, activity logging. If the tool is not approved for client data, the information does not go into the tool. AI convenience never overrides confidentiality obligations. Phase 3 is data preparation. AI cannot produce reliable bookkeeping from incomplete, duplicated, or poor quality source information. Before categorization begins, the workflow checks statement periods, opening and closing balances, duplicate files, unreadable documents, and missing accounts. Here, a June credit card statement is missing. Stop processing the account and request the missing document. This prevents the team from creating a false impression that the records are complete. Phase 4 is AI-assisted extraction and preliminary categorization. The system reads transaction descriptions and supporting documents, compares vendors with prior activity, and suggests accounting treatment. Adobe $89.99 is a recurring software subscription. 99% confidence. Harbor Shield $4,850 looks like insurance, but there's no prior transaction. 84%, and a $25,000 shareholder wire stays unclassified. 42%. The system does not hide uncertainty. It shows the proposed treatment, the evidence, and the confidence level, so a reviewer can challenge it. Phase 5. Before a human reviewer sees the transactions, automated rules test the AI output. These deterministic validations are different from an AI prediction. They compare amounts, dates, account types, duplicate indicators, prior period patterns, and client-specific requirements. Two identical invoices trigger a possible duplicate flag. A $48,000 vehicle, suggested as office supplies, is blocked as a potential fixed asset. The workflow should fail visibly. It should not silently force an uncertain transaction into the nearest expense category. Uncertainty must create an exception, not a guess. Phase 6 is risk-based routing. Instead of treating every transaction equally, the workflow directs them into different review queues. Green, routine review. High confidence, a known vendor, supporting document present. Amber, detailed human review. A new vendor, an unusual amount, a missing invoice, or moderate confidence. Red, senior accountant judgment. Owner or related party activity, loans, equity, or a material unusual entity. High confidence does not mean no review. It determines the type and depth of review. Risk scoring prioritizes attention. It does not transfer accountability to the system. Phase 7 is the first human review checkpoint. The reviewer opens the Amber transaction. Harbor Shield $4,850. AIVA suggested general insurance, but the policy document says workers' compensation insurance, and the prior year ledger classified it the same way. So the reviewer changes the account and adds a note explaining why. This is where the accountant as context the AI did not fully understand. The source document, the business purpose, the prior treatment, and the client's accounting policy. Consistency matters, but consistency does not justify repeating a prior error. If the treatment changes, document why. Phase 8 is exception handling. The reviewer opens the red transaction, the $25,000 shareholder wire. The evidence supports 4 possible treatments: a contribution, a loan, a distribution, or a transfer. When the available evidence does not support a reliable conclusion, the reviewer does not guess. The item moves into a client question workflow. The client confirms it was a shareholder loan and uploads the signed agreement. The reviewer checks the amount, the date, the interest rate and the repayment terms, and posts it to shareholder loan payable. Exception, question, evidence, judgment, documentation. Phase 9 is reconciliation. Even when individual transactions appear correctly categorized, the accounts must still agree with external records. The bank shows $184,220. The books show $184,920, a $700 difference. AIV points to two possibilities: a duplicate $500 payment and a missing $200 bank fee. The reviewer removes the duplicate and records the fee, and the difference goes from 700 to 200 to 0. AI helps locate possible differences. The reviewer confirms the cause and approves the correction. Phase 10 is financial statement review. A reconciled bank account does not automatically mean the complete books are correct. The senior reviewer evaluates whether the statements make sense as a whole, comparing revenue with prior periods, investigating unusual expense changes, and reviewing owner activity and old balances. Software expense jumped 62% because a new annual contract was posted entirely in 1 month. So the reviewer considers whether a prepaid expense treatment is appropriate under the client's policy. This is where accountants apply materiality, cutoff, accrual, presentation, and business context judgment. Phase 11 is documented approval. Before reports are delivered, the workflow records who prepared the work, which AI tools were used, which exceptions were found, who resolved them, and who approved the final statements, with names, dates, and times. Automation complete. Review complete. Final approval complete. AI never provides the final professional sign-off. Phase 12 is white label delivery. The outsourced team works behind the scenes, using the CPA firm's approved processes, chart of accounts, review standards, and communication protocols. The CPA firm maintains the client relationship and determines the final deliverables. The client sees consistent service. The firm keeps control. The back office gains capacity. A strong white label relationship should extend the firm's workflow, not create a separate, uncontrolled process. Phase 13 is controlled learning. Approved corrections can improve future rules, prompts, and mapping suggestions. But feedback must be governed. One correction should not automatically create a universal rule for every client. The firm monitors suggestion accuracy, human override rate, exception rate, reconciliation differences, and reopen work. If the same error appears repeatedly, fix the workflow, not only the individual transaction. Monitoring helps detect model drift, weak rules, and changes in client activity. OBG outsourcing helps accounting and CPA firms expand back-office capacity through white-label bookkeeping, accounting, reconciliation, cleanup, tax support, and human-reviewed automation workflows. AI can accelerate extraction, categorization, exception detection, and repetitive review. Experienced accounting professionals add validation, documentation, consistency, checks, and judgment before work is returned to the CPA firm. The goal is not to remove accountants from the process. It's to help them spend less time on repetitive processing and more time on review, judgment, and client service. AI-assisted, human-reviewed, CPA firm control. AI can improve accounting speed. Human review protects accounting quality. If your accounting or CPA firm needs a white-label back-office workflow that combines automation with human review, contact OBG Outsourcing. Subscribe for more practical accounting automation demonstrations. This video provides general educational information. Each firm must design controls appropriate to its services, clients, professional responsibilities, applicable standards, and risk profile. AI outputs require appropriate human evaluation and professional judgment.